I don't expect you to know everything about everything, even though you're supposed to. That's impossible. Hire the right people. And when it comes to your insurance, take it seriously. Get a business broker who's willing to work with you and sit down with you and take time to explain to you, number one, why you need this kind of coverage. Number two, don't buy on price ever. Buy coverage. And three, look for absolute exclusions and other what I call gotchas that'll get you because they're everywhere.
Hey, I'm Jason McClaren. Welcome to Leadership Balloon Podcast. My guest today is Frederick Fisher, JD, CCP, seasoned expert on professional liability. Frederick, welcome to the show.
Pleasure. Absolute pleasure. Because when they get sued, they hand it over to their lawyer, corporate lawyer, and they don't ask, do you have insurance?
Yeah.
So by the time they get around to reporting, it's too late.
Yeah.
So I wrote a book about this. Okay. But the real problem is even deeper. And this is why I think this is a more generic need out there for people. You can't rely on your insurance broker either.
Right.
They had California, believe it or not, as commie infested and liberal as we are, was the first to come up with the concept that an insurance producer has no duty to advise you unless they hold themselves out as experts. Yeah. They agree to do a risk management review for a fee in addition to the commission they make, or they misrepresent coverage to you. Right. Absent that, they have no duty to advise you. It'd be like they have no more obligation to you than your server at your favorite restaurant.
Right.
It's kind of like you go into the doctor and he says, "Hey, Jason, what's wrong with you today? And how would you like me to treat you?"
Right.
You know, how ridiculous is that? But 37 states follow that.
Yeah.
37. And the ones that don't are Arizona, Connecticut, Florida, Georgia, Hawaii, Idaho, Michigan, Montana, New Jersey, Pennsylvania, Virginia, Washington, D.C., and West Virginia. Interesting that Florida is one of two states. One, New Jersey is the other one that did it by codification. They passed a law for it. But in Florida, it's common law by appellate decisions. Florida is more liberal than we are. They hold, and same with New Jersey, they hold producers to a fiduciary standard of care, not an order taker standard of care. Go figure that. So there's where your real problem lies. Insurance, they're holding the consumer to know more about what they need than the person selling the policy. Now, for the record, I testify regularly as an expert witness. And so in the 37 states that follow the order taker standard, that's the order taker standard. That's what I will base my opinions on. I'm not there to try and, have the rulings based on what my personal opinion is. I have to testify as an expert, and I will honor that. But personally, it's wrong. It's just wrong. So there you go. And I think that's the reason why this was scheduled. Is that the real message here is how do you get what you need from your insurance producer? And it boils down to you got to tell them. You got to be explicit. You don't want to tell them, I want the best policy at the cheapest price. I mean, how ridiculous is that, right? The problem with that is that we're all brainwashed into buying insurance on price, and that's wrong. Everybody assumes every policy is the same. I mean, this company's homeowner policy is the same as this other company. No, they're not. And the same with auto insurance. We take that for granted too. And then, when you get into business insurance, it gets much more complicated. And no two businesses are 100% alike. And so no two policies can be perfect and 100% alike. So really, you're supposed to figure that out on your own. How do you do that? You got your own business to run. You got your own pressures. How many hats do we have to wear? Are we also supposed to be involved with our own medical care? And they're saying you should. How many people know that when they stick a line in your arm that, for any reason you're in the hospital for more than 3 days, you need to change the line, otherwise it gets infected. You don't learn that until you've had it happen to you. But we have to know that too. We have to take charge of our own medical care. What the hell? How many hats do we have to wear? And now we have to understand insurance as well. That's absurd. It really is absurd. Yeah, but people don't realize that. And, of course, there's don't forget the placebo effect. Here's your policy, Jason. Don't you feel good that you saved $500? And you don't know whether you got anything good or not until you have a claim, which is not when you want a surprise.
Yeah, I think a lot of people that have side hustles are in that same boat. They don't realize they need insurance, especially if you're doing, home-based businesses where you're, building decks for people, or, what a lot of people do as side hustles.
Well, home-based businesses are even worse because your homeowner's insurance is going to have a professional services exclusion or business pursuits exclusion. So you have to be real careful about that. The fact that you've decided, okay, I'm going to use my empty extra bedroom exclusively for an office, and you can deduct that from your income, perhaps, if you want to do that with the IRS. That's all well and good, but that has nothing to do with insurance.
Well, I think so. For our listeners, there's a lot of the listeners that are off-duty firefighters, off-duty police officers, and a lot of these guys have roofing companies or gutter companies, things where they're touching people's houses, maybe security companies, and they get the bare minimum through their state that they're required to have, or they get $1 million general liability or something. But
Well, even the states, even when they mandate you must have certain types of coverage, they don't really mandate that you have all the kind of coverages you need. I mean, workers' comp is certainly something everybody's aware of, but it's depending on if you are the owner of a company or corporation, you're not required to have workers' comp, but you still have to sign a waiver officially.
yes, yeah, I didn't know that.
Yeah.
I know Leadership Loading Podcast is part of Go Hero, so we have the director's insurance, but like you said, we probably need to get media insurance.
Yeah, media liability, and then of course cyber liability. Boy, has that changed. Cyber exposures are not like they were even 10 years ago. The applications have gotten longer and stricter, and they're really asking more in-depth questions now about the level of security that you are implementing to make sure that you're not hacked and that confidential information isn't taken. And the technical aspects of these applications are such that if you're not a computer geek, you're not going to be able to answer those questions. But if you answer them wrong, if you represent that you're doing all these different things to be safe and secure, and you're not going to be covered. They're going to claim misrepresentation on the application, and they're going to win.
Where would you suggest the consumer starts looking for that information if they're trying to get insurance? Where should they start looking on what they need?
You want to look at websites for particular insurance brokers, see if they hold themselves out as experts and specialists. That means that they're going to be held to a higher standard. If it's a website that's ambiguous because they don't really say that, that means that they're being careful not to. Then you have to make it your concerns expressly and explicitly communicated. You have to put it in writing. You have to say, look, I'm not a specialist. I don't understand coverage. This is my business. This is what I'm doing. I'm looking for somebody who will help me be properly covered, and and it has to be specific. There's a law firm out there that wrote an article a couple of years ago, basically asking or stating, when should you have your lawyer look at your insurance policies? And of course, the obvious answer was before you sign on the dotted line. The problem is they listed out 18 different policies that businesses you normally buy today. 18. And you're going to get a lawyer to review all those? Are you kidding me? And, depending on your exposure, you may have a 50-state problem. If you're doing business in all 50 states, or you have customers in all 50 states, how are you supposed to know that a traveler's cyber liability policy is not going to cover social media fraud in one state, but it will in another, and it's the same policy? It's how the courts are interpreting that. How's anybody supposed to know that? I don't even know if the underwriters know that because, they're regional. But that's the reality of it. So you really have to make, be somewhat specific. Say, look, I don't know what kind of coverages I really should have, what I really need. And we all know you might need general liability. You might need property insurance for your own business property. That can be combined on a commercial general liability form or a package, what they call it, a commercial package. Then you might need an umbrella or an excess policy. And that used to be it. Now you need to know, do you have any environmental exposures? Are you providing a service to somebody else for a fee? Is your product something that really should have its own separate and standalone product liability policy because you're making something that's like a widget? Do you have product recall exposures you have to worry about? These are all different hazards that somebody who's a specialist in commercial insurance should be able to guide you on. And you've got, as a consumer, must force that issue. And then it gets worse. I mean, here's something else that, I don't think most people realize. More and more insurance companies are beginning to act like any other business. They want to be absolved of any liability. They want to be absolved of any exposure. They want to sell a product and hopefully not have it cost them any money. Well, that's exactly what insurance is about. Insurance is supposed to be you get enough money from a pool and you pay claims. And at the end of the day, hopefully you got money left over that you priced it right. But now they don't even want to do that. And lawyers, again, are actually writing articles, and I've got copies, I'm not making this stuff up, where they're literally saying it would behoove insurance companies to hire knowledgeable coverage attorneys so as to be able to avoid paying claims, to write language that will help you avoid paying claims. Now, we're not even talking gray area stuff here. We're talking what would be normal and customary for that type of business should have that type of exposure covered, and then they're writing exclusions so they don't have to. And the courts are saying, well, the policy is not illusory as long as one type of claim is covered, just one. And a good example of that was in 2009. It was James River Insurance Company versus Ground Down Engineering. Ground Down Engineering was an engineering firm that did nothing but Site 1 core sampling of land to see if there was any pollution. That's all they did, 100%. And they bought an E&O malpractice policy from James River for their engineering services. And the policy, was fine and it looked like it. And they did a survey, a Site 1 survey for a client, and it turned out they were wrong. There was pollution there, and they got sued. And so they tended it to their insurance company, and they said, "Oh no, we've got a pollution exclusion." They used absolute language. We don't cover any claim arising directly or indirectly involving any environmental hazards or pollution. Period. It didn't go on to say committed by the named insured or committed by an insured. So that means any pollution created by anybody. And the trial court agreed and dismissed the case. The appellate court said, "Oh no, this is a malpractice policy. They weren't the perpetrator. They're being covered for their own mistakes. They should be covered for their own mistakes." And so they reversed the trial court. The Florida Supreme Court said, "Oh no, you're wrong. We're a strict constructionist. We believe in the four corner rule. This is an exclusion that's clear and unambiguous. And so we're enforcing the exclusion." And if you think, and then they raised the thing, well, this is all they do. So that would render the policy illusory. And the court rationale in all its wisdom was, oh, no, it's not. They're an engineering firm. If they did any other kind of engineering work, they'd be covered for that. So no, the policy's not illusory. And so they ended up with no coverage. Boy, did that get my attention. And the result, you look at some policies today and they'll have a mix of exclusions. And they'll say, we don't cover any claim arising directly or indirectly from X, fill in the blank, and then it'll say committed by an insured. Or there may be what's called a carve back, where it says this exclusion won't apply when the insured is providing a service to a customer. Okay, I can live with those. I can live with that. It's when they don't say anything. It just says we don't cover any claim arising directly or indirectly from, fill in the blank, period. So it's not limited to just the insured, and there's no carve back. So what's that say about intent when you got a policy with, 28 or 30 exclusions? Some of them have carve-backs. Some of them refer to the insured. And then you got 14 more that don't. So there's your danger. Guess who has the fewest? You want to take a guess on who has the fewest, at least at the moment? That's starting to change now. Who has the fewest absolute exclusions in their policies? Want to guess?
Like the brand?
Yeah, type of insured, like architects and engineers or accountants.
No clue.
Lawyers.
Oh.
You know why? The insurance industry doesn't want 450,000 law firms suing them for unfair trade practices. That's why. But that's starting to end. I'm starting to see lawyers' policies with more and more absolute exclusions in there that limit the type of services or coverage for services they might be providing. And so that's good. They're going to wake up real fast and find out, oh, now they're turning their guns on us. And it really boils down to, as far as I'm concerned, this fanatic belief that businesses should only be making a profit. That's their only raison to be, and to make profit, and wealth for their shareholders. Product be damned. Who cares? We can make more profit by squeezing, a little bit, here and there out of the product we're providing. Who cares? We have to make a profit. Well, does Boeing come to mind? Did you ever think you'd be scared to fly on a Boeing aircraft? And the same thing you're seeing in our food and everything else. Actually, the couple of things that Kennedy's actually doing that I agree with. Let's get rid of all these dyes. Let's get rid of all these additives that are being put in there just because it's cheaper to make. Who cares if it's a little more unhealthy? And yet these products are also banned in Europe. What do they know that we don't? Compare the Heinz ketchup recipe that's sold in the United States with the Heinz ketchup recipe that's sold in Europe.
Right.
That kind of thing. But that's what it really boils down to. And you got law firms that are involved in helping insurance companies avoid paying claims and drafting language to get away with it. And the problem is that the mistake that's being made here is that it's not just consumers, folks. Let's not forget the supply side of the business industry is also a consumer too. Just ask Pharmacia. You know who Pharmacia Corp is?
No.
Big pharmaceutical company, multi-billion-dollar company, multi-billion, worldwide. And as you can imagine, a company that size is going to have towers of excess liability insurance. They're called towers because you're not going to get one insurance company to write a policy for $1 billion of limits, right? So you're going to buy a lot of policies to get up to that layer. And so two things that you have to be careful about when you're buying layers of excess coverage. Number one, you can't settle any case unless you get everybody's permission. You got to let them know. And, big corporations, they're going to be self-insured for the first 5 or 10 million anyways. That's like a deductible. They're not going to buy, first dollar coverage like you and I do. They're going to buy a policy that starts out, let us know when you've hit 10 million or 5 million, and then, we'll come in and pay our limit. But you have to get permission from them. So here is a company that entered into a $207 million settlement. 207. And so they had multiple layers of coverage. They had to get permission from every one of those insurance companies before they could get and commit to that settlement. And they got it. Everybody said, fine, sounds like a good deal. So they get to what's called the sixth layer of excess. That started at the $160 million layer, and they refused to pay. And the reason being is they had a sentence in their policy that had two conditions. And this was built into the policy, by the way. It wasn't an endorsement. And number two, this wasn't some fly-by-night company you've never heard of. This was a Hartford subsidiary, Twin City Fire. They had a sentence that said, all underlying insurers must have tendered their limits, which I would expect. I have no problem with that. Come to me, don't call on me until 160 million is on the table. And the second part of the sentence was what got me. All underlying insurers, not the policyholder, mind you, the insurers, had to have admitted liability. Ever heard of it? Anybody admitting liability in the settlement?
Never.
No. And the appellate court enforced it. This was New Jersey, enforced it. So in essence, Pharmacia had to was out of pocket $47 million to make up the difference because all the excess companies above Hartford were gone because they had the same warranty. Everybody had to tender their limits. Well, Hartford wasn't, so we don't have to either. They're out $47 million. And it turns out that wasn't the first time that language had been enforced. It turned out in 2012, there was another case in New York that enforced that same language. I didn't see anybody reporting on that back then. I get all these feeds, to keep me up to date from law firms and what have you, aggregating services. I never saw a write-up on that in 2012. So I was stunned. I still am stunned. But, the insurance industry is no different than anybody else. They're all cutting back. They're all trying to make more profit, and they've forgotten what their real, mission is. And the National Association of Insurance Commissioners, whose mission statement it is to regulate the industry for the benefit of the policyholder and everybody else, for that matter, and yet still make a profit doing that. They're just ignoring the problem. They're just sitting back, but they're political hacks anyways. They're either appointed or they're elected, but it's still political. So, that's what's going on. And it's, this, I don't know how we're going to stop this, but, this isn't the insurance industry I grew up with. But, obviously policyholders are going to have to, including corporate policyholders, are going to have to start banging on the desk. And this is what our expectation is. And be specific. You can do this. And then there are plenty of insurance brokers out there that think like I do. My mantra when I owned my agency was we provide financial security. We let our competitors sell you some insurance because it's being sold like toothpaste today.
So I can tell you're very passionate about this, and you wrote
Oh
a
yeah, I
and
love the insurance industry. I've been in it for 50 years.
yeah, I didn't get much into insurance until I got into the risk management division at one of my first civilian jobs, and of course now I'm in commercial maintenance and real estate, and so I see a lot of exclusions on contracts and things we have to sign
Well,
for different
sure. You got
services.
an environmental exposure too.
Yeah. So
A big one.
you wrote a book on this or about this?
Well, yes, I did. It's called Claims Made Insurance, the policy that changed the industry. And it's available on Amazon. It's got 17, soon to be 18 five-star reviews. It's not written for the industry person. It's written for the consumer. Claims made policies can get really complicated really quickly. And so I looked at it. I'm one of the few people still alive that was around when they first started up in the late '60s and got traction in the '70s. My earliest policy in my library is from 1972, and I can trace all the language ever since. If I've read one, I've read thousands of policy forms over the course of my career, and I've seen how they've evolved, and I understand why. And some of it I agree with, and some of it I don't. But for the most part, um, that's what I've done. And so I wrote this book for the consumer. So it's not technical, it's not legalese. I've done my best to take complicated concepts and be able to explain them in a manner that the average person should be able to understand and relate to. And you need to. I mean, there's a reason for the way these policies have developed and how complicated they've gotten. Thank you, lawyers. And but getting good coverage is possible. Having the financial security that I think everyone should have is possible. It can be done, but you got to do a little homework on your own, and more importantly, you got to have a broker that's willing to work with you. And that means that you got to put it in writing as to what your expectations are. To sit down with you and explain to you what you need. For instance, I assume you're a homeowner.
Yeah, definitely.
What's your code and ordinance coverage? You know, you know what that is.
I live in the county, so we don't have a lot of codes and ordinances in the county where I live.
Do you know what it is?
No.
It's the extra cost of rebuilding your property that is exclusively an improvement because building codes require it. Normally, when they're going to rebuild your house under a replacement cost policy, they only have to pay for what it takes to rebuild as it was. So if you had Corian counters in your kitchen, they're not going to pay for you to get marble. If you had carpeted floor, they're not going to pay for you to put in really good hardwood. On the other hand, building codes, however, supersede. And there may be improvements to the house because over the years, there's new stricter building codes.
Yeah.
So how much of the cost of rebuilding your property has appreciated because building codes have gotten stricter and now you've got to rebuild to the code. So most of the time your code and ordinance coverage on your homeowner or condo insurance is limited to a percentage of your fire limit. So if you've got $500,000 in fire, it might be only 50,000, 10% for your code and ordinance, which depending on where you live may be woefully inadequate. Especially if you're in Malibu or Beverly Hills where the building
or any major
crazy.
city, really.
Yeah. So people don't know that. People don't know that. They find out the hard way. And this is where, I saved $400 in my homeowner insurance. Yeah, until you find out that you have, your building and ordinance coverage is inadequate, and you're going to be out of pocket for that. And debris removal or shrubbery coverage. Believe it or not, there's some sublimits for that. They don't go over any of this, and you're supposed to read an 86-page policy and find that. Even I have trouble finding it.
Right.
you know? So the whole thing is rigged. And when you live in a state where insurance producers not held to a fiduciary standard, how do you get that kind of service from them? And you have to force it. You have to force it in writing because it all boils down to the guy selling it. And avoid buying policies online. I mean, especially your generation. Oh boy, I got this. There's this really great new website. You can buy insurance like that. And then you're going to get the policy. You're going to read it? No.
No, no.
It may be only 15 days to look at it and say, gee, this is crap. I want my money back. And some companies will honor that. I don't mention names, and so I'm not going to, but there was a company that did that. They give you 15 days to review the policy, and then they give you your money back without any penalty, without any what they call early cancellation penalty. So, you're supposed to know that it's garbage. And you can't, and most of the time when you're dealing with these online systems, you can't even get a specimen to review in advance. So how do you know? You're not going to.
Yeah, you got to do your research.
That's the problem. And like I said, I've got a new book coming out soon. This research is just about done now. And it's going to be called The Gotchas That'll Get You, which is also something, a sentence I've trademarked because everything I'm doing now, all my publications and articles are starting out now with The Gotchas That'll Get You, So that's trademarked. And we should have it official very shortly. The preliminary on it has been very positive. Nothing's close and nobody's challenging. So we expect to be approved by the Patent and Trademark Office very shortly, and then we can do the Circle R. But that's what it's called, the gotchas that'll get you. And it's getting worse. But it's not just us guys, hardworking people that are just trying to make a living in this world. Big corporations are being burned too. Insurance companies are being burned. How do you like that? United National Insurance Company with a, decent sized company, not a biggie, but, decent sized. They got burned down in absolute exclusion for pollution because they were selling pollution liability policies to their customers. And they got sued for bad faith, and they had a malpractice policy to cover them for bad faith. And there's an absolute exclusion in there for pollution. So they're on, just like Pharmacia, they're on the hook for several $1 million because they didn't realize there's an absolute exclusion in their own policy. And this was an insurance company.
Crazy.
What's wrong with that picture?
Yeah.
But I'll give you another one. You're going to love this. Major insurance brokers, some of the top insurance brokerages in the world. I won't mention names. They're forcing it and jamming it down the throats of their salespeople. Don't give advice. Don't do it. We can't be legally liable if we don't give advice. Well, here's the problem with that. Number one, you're going to get sued anyways. So what have you gained? Number two, it's going to cost a fortune to get to the point where you might be dismissed based on the order taker standard. Maybe. 80% of all cases settle. What have you accomplished by not giving the advice? It's the reverse, dummy. If you gave the advice, chances are you wouldn't have a lawsuit. And if it's all documented, even if you do, it's going to be over pretty fast. And so what have you accomplished by adhering to the order taker standard? Nothing. And a good example of that is one of the major brokers. A lot of them are publicly traded, so you can get your hands on their it's easier to get their financial statements because they're filed with the SEC. Anyways, one major brokerage has in 2023 their financial statements disclosed $355 million in reserves for paying malpractice cases and legal fees. Because when you're that big, you're going to be self-insured for maybe the first 5 million. And so you're paying 100% of everything for the first 5 million on every claim. They had 355 million in reserve. So how's that order taker standard working out for you guys? How? Right. I'll go, I'll bet you if they gave the advice and helped their policyholders, their corporate policyholders, they could reduce that by more than half. Think of the C-suite bonuses they could get.
Oh yeah, all the time. Well, Fred, we're getting short on time. Can you give me one leadership tip for new leaders?
For new leaders?
Yeah.
Do your homework. I don't expect you to know everything about everything, even though you're supposed to. That's impossible. Hire the right people. And when it comes to your insurance, take it seriously. Get a business broker who's willing to work with you and sit down with you and take the time to explain to you, number one, why you need this kind of coverage. Number two, don't buy on price ever. Buy coverage. And three, look for absolute exclusions and other what I call gotchas that'll get you because they're everywhere. You really have to know your stuff to do this. And there are plenty of brokers out there that'll do it. I believe me, I've got quite a list of brokers I'm tracking now from LinkedIn connections or whatever that take it as seriously as I did because they're there. They'll kick the ass of a big broker every day of the week because they won't do it.
Definitely. We'll put your book links in the show notes below so people can get a hold of it.
You need me to put it? You want me to put it in the chat for you?
Hey, everybody. This episode of the Leadership Loading Podcast was brought to you by Go Heroes Inc., goheroes.org. If you'd like to be a sponsor, go ahead and check out our website or email us, and we'll get you all the information you need.
There are thousands of leadership and management podcasts to choose from. We're glad you chose the Leadership Loading Podcast, a Go Heroes production. If you'd like to support Go Heroes Inc., visit www.goheroes.org. And with that, it's time to wrap up today's show. Thank you so much for listening. We sincerely hope you liked it. Don't forget to like, subscribe, and share this podcast with your family and friends. Let's all grow together. Thanks for listening to the Leadership Loading Podcast. Leadership inspired.